What's going on, everybody? It's your boy C-Zar, and we are talking about XLM stellar lumens today. Hit that like button, subscribe if you want to see more content like this, and let's get into it, my friends. Let's talk about the price action here. Here we are at 28.5 cents on this, the 27th of February. February's coming to an end, coming to an end soon, my friends. Hold on, man. I gotta clear my throat. All right, that should do it. 28.5 cents now. It's certainly looking like you've got the potential for a double bottom. However, double bottoms normally, you don't linger here for too long before you rip. I would expect today that you start moving up and recovering. That's the expectation. Let's talk about that. Before we get into the bullish stuff, which is talking about prices above $2, which we always like to talk about. You got 28 cents now. Talking about prices above $2 could imply a 10x potential, maybe. That would be at like $2.80. Probably not a 10x, but something at least that would be over a 5x. Just to look forward to at the end of the video. There, we'll talk about that. But on a daily basis, looking at this here, not only do you have a double bottom look in your price, but you've got this double bottom look in the RSI. What's great about the RSI is these readings come in by the end of the day, the closing point of the day. So you got this low here in the RSI. Actually, whoa, you got that low, not even at the low of this price here. You actually got that low in the RSI right here at this low. In which case, you actually had a low here, a higher low there. That was bullish divergence. Oh, damn. So this isn't bullish divergence. Oh, well, it's just a double bottom overall. But that's okay. It's not bullish divergence. That's fine. Double bottom on the RSI, double bottom on the price. You're at probably the end of this downward sloping trend in the RSI. I hope it's very obvious this is downward sloping trend right here, right? Oftentimes with the downward sloping trends, you end in the oversold zone. Upward sloping trends, you end in the overbought zone like you did here. You dipped into the oversold zone, and whenever you're trending in a rather bullish formation overall, like for a cycle trend in an overall bull market, you would expect to get deeper in the bullish readings than you would in the bearish readings, so that's all good. I don't think, what I'm trying to say by that is I don't think you have to go lower like you did here. You went higher to end your trend. You could, it's possible, of course it is, but double bottom in the RSI, that's what it looks like now, as long as you get a day to close green, and I think today's the day. Double bottom in the price. That's what it looks like for now, as long as you don't go below that low, and I don't think you will. We look at the 4-hour time frame. This is still not bullish divergence, damn. But that's what, you don't need bullish divergence to form a low. I just like it because it's a very obvious signal here in a downtrend in the 4-hour time frame as well. Looking like you want to break out of this. This bounce off the oversold zone, it tends to merit good things, right? Like here, continue to grow to the overbought zone. Here, that's what started you on your path overall, right? Here, it didn't merit much, but the fact that it didn't that one time probably means you're more likely to do some good stuff this time. I don't know. 4-hour downtrend in the oversold zone. You break out of it here. You'll have the day close green. Absolutely you will, and I think that you will. And then obviously from there, closing the day green would result in a positive reaction for your daily RSI as well, getting ready to break out of the downtrend in there. And then of course, reflecting that into the price, breaking out of this downtrend, you would see some kind of retracement of the overall move itself from the high in November 24th, 2024 to the low that we just had in February 3rd there on that Scarif Monday. We went to the 382 and then down below the 236. It's absurdly common whenever you do this kind of move to go to lower prices. If you don't go to lower prices, what you look for is exactly what we're doing now, is a double bottom, and it's less common. It's very, very uncommon. But I think for a coin like XLM, this is what we're looking for, and there's certainly things that suggest that, right? On the 4-hour chart, on the daily chart, that we'd be moving up from here. On the 1-hour chart, let's just see. 1-hour chart had a little bit of bullish divergence, and actually the 1-hour chart it did break out of its downtrend. You're consolidating here and looking like you want to build up higher. Yeah, the 1-hour is very suggestive, and the 4-hour are suggestive that you're going to move up from here. So I assume today you do retrace probably, let's see what this is. Probably to, where are you going to be by the end of the day? High to low here. I bet by the end of today, Stellar Lumens XLM, I don't know. I mean, obviously, I think that you're going to be above 30 cents. Yeah. You're going to be above 32 cents at some point today, I think. You could be, I don't know, man. You could be above 35 cents. Who knows? You might see some kind of dramatic recovery. You might work your way all the way back up to the top area of this zone here. I wouldn't put it past you, man. You might run all the way back up above like 34 cents. I don't know. I would expect at the bare minimum something that's at 32 cents, but probably above that. By the end of today, let alone what's going to come in the weeks and the days afterwards. We can talk about that now. I want to look at this real quick too before we get on to that. XLM. Let's just See if there's anything that I'm missing that this thing's picking up on. Nice reversion at the bottom, baby. We love it. We love it. 4-hour time frame, good. Yes. What about the daily? Nothing. Whatever. The dailies. I feel like this indicator is more reliable on the short term stuff. Personally, it's like better for day trading than it is for long. Anybody wondering what this indicator is? It's just the LRO, logarithmic regression oscillator, made by Chart Prime. You can have this indicator. It's free. I think you have to have TradingView Premium, so it might not be free in that kind of aspect, but maybe you don't. You just go to Community. You click on your indicators, click on Community, scroll down until you find it. It's right here. Linear regression oscillator, Chart Prime, made by Chart Prime. That's the author, right? It's a little bit down on that list there, but this list goes on. There's probably plenty of indicators here that are worthwhile. I haven't checked out all of them, but that one I was skimming through, seeing if any of them were worth it, if they helped. A lot of them suck, and this one actually seemed to be rather helpful. I'm not going to explain how it works. If you want to understand how it works, I've made a couple videos trying to explain it in other videos, and I should just make a regular video explaining how this works, but there are other people on YouTube that make videos like this. I'll make my own video, so I stopped just sending traffic their way, but hey, they deserve it too, whatever. We hit the invalidation level, but we did not go below it. The people that I learned from, whenever I first learned about this thing, I was told that if you interact with that invalidation level at all, you did invalidate it and you are going lower. But in my time using this, that's not actually been the case. Oftentimes you do find them as points of resistance or points of support. So like right to a T. And it makes sense that you would, because these invalidation levels, they often come from closing periods, like significant closing lows or closing high periods that would be significant in the price action too. So I wouldn't say invalidation. I would say like a support level. If you break that support level, if you break it, but who knows? I don't know the guy that actually made this. Maybe he did make it. Maybe the guy that I learned from was just not as intelligible on this. He didn't know. He said if you interact with it at all, that means that you're invalidating it. But I would say you have to break it. Interacting with it is not the same as breaking it. And all I'm trying to say by that is it looks like you found support at a key area. Looks like you want to go up. Prove me right that you're going to see targets above 32 cents by the end of today and break above 29.8 cents. You get above 29 point, let's just say you get above 30 cents. It's inevitable. You're on your way right there. And I know we're not talking about huge moves, but I'm looking at this to confirm. It looks to me like we are moving up, not moving down. 3 hour, yeah, it all looks good, baby. It all looks good. We're about to make that move. All right, daily time frame now. So we're talking about what's beyond just today, right? And who knows, you could be well above 32 cents. Maybe you're above 40 cents by the end of today. I really don't know. But high to low here, overall in this retracement, I would expect that you probably work your way back up to the top of this retracement in less time than it took to find the bottom, right? So I would assume that probably within the first couple weeks of March, you would see this price come back up to anything from around like 52 cents to 57.5 cents first couple weeks of March there. That's my expectation. And then going into the latter half of March, we'll be breaking out, seeing new all-time highs all around. I suspect by the end of March, if not by the end of it, by the end of March, I suspect you will be probably above $1, if not around there. If not $1, at least 81 cents. But by the end of April, I would expect that you do see prices up at about $2.68, $1.97, somewhere in between there. These higher, deeper, extended levels. That's my expectation, right? We can go over why I expect that besides just these random lines that have numbers next to them. What does that mean? Why should I believe that this is where we're going to go? Because you drew a box on it. I get you. I understand you. Let's help. Let's help with that, okay? So let's look at this on a weekly perspective. Okay. This is what you call a bull flag. If you're unaware of what a bull flag is, it's very easy to comprehend, okay? Because it's a chart pattern where it basically looks like a flagpole and a flag, right? It's a bull flag. That's what it's called. Look it up on Google. You'll understand in 5 seconds how to go about this. You measure, everybody knows this thing, right? From a low to a high, that's your flagpole. This is your measure move right here. You put your measure move at the base of the flag, and that's your measure move target right there at about $1.90, which that's great. That's the measure move of this pattern. Statistically speaking, bull flags are one of the better performing patterns to hit their measure moves. Measure moves are just ideas. They're not requirements. You could fall short of your measure move. You could blast through the roof of your measure move and come nowhere close to it, right? But the idea would be you see a similar move to what you saw here, something like that. My expectation would be, based off of that alone, we see a bigger move. I wouldn't think that we actually see the same move, right? Because this move here, and I don't know if you guys can hear that, but that's my cat's. That's one of my cats in the litter box. Is what it sounds like. He's like all the way at the other end of the house though, so I don't know. It's just this house carries noises sometimes. and I don't have a door, so it's just, you know, it's all, I just got the hallway right there, right? I'm in this little nook right here. Hey, there's a plant right there for you. They haven't done too well. Let me see, actually, right? Like I got, let's see here, right? So I'm like sitting up against this wall, and it's like a nook in the hallway, right? Like that, something like that, right? And I've got my window, my light. That's what the setup looks like. It's not perfected. It's not completely perfected. And don't judge my plants. We had a 4.5 hour drive. It actually was longer than that. They went through hell, but they're coming back, man. They actually like. I think this mountain light agrees with them. But enough of that. What was I talking about? Why did I get all the shot? Oh yeah, I was talking because of my cats. My cats made the noise. Anyways, getting back on topic here, you guys. Hit the like button and subscribe if you enjoyed any of that. If you don't enjoy any of that, you're probably already gone. But the bull flag measure move, why I think, because this move here is the exact same move as what we did here. That's how we got the measurement. Why I think you would actually exceed this measure move is because at any point above this price here at 93 cents, at any point above there, you are officially breaking out of a multi-cycle long consolidation phase. You're breaking out to new all-time highs. You're rejecting the idea of a triple top. You've got all these bullish things coming into play at once from a fundamental standpoint. I would think, you know, coming off of your bear cycle lows, that was a nice move, but I would think breaking out of multi-cycle highs might promote an even better move. And at that rate, you know, we can look for our fibs. Right? So already we've talked about $1.90 as a measure move from a high to a low here. What would make the most sense? Well, if you're there and we're expecting a stronger move to happen, what's the next target? The minimum target of this fib range from a high to a low is the 1272, and that's at about $2.46. We take this high to low of the pattern, and I bring up those deeper extended levels that I was like, nobody cares because you don't know what they mean. Maybe you do, maybe you don't. But I was just, whenever I said that, that's right here. The 2272 is just above that measure move. The 2618 is right there, right above the 1272. I firmly believe that not only will you see prices that are higher than the measure move, not only will you go above $1.90, you'll go above $2, and you likely don't stop until you see something around like 245 to 268, or at least something around $2. Okay, that's my expectation. So all that aside, expecting bullish things today, expecting that you move up rather immediately. I think it's going to happen probably by the time most of you watch this video, and if not, by the time I make videos in the morning. Right, it's gonna move up beyond this range. We're looking for something that's above 30 cents. By the time you get above 30 cents, you're on your way to 32 cents and beyond. Whenever you finally do break out to new all-time highs, you're on your way to prices that are worth multiple dollars by the end of March, if not more likely, probably the middle of April, right? These end of March targets were targets that we had since the beginning of February. It's the end of February now. We've only gone lower and we haven't broken out. So it makes sense that if we had the same targets here in the beginning of February, that's not in the beginning of February, here in the beginning of February, and here we are at the end of February now, it would make sense that those same targets are still there, but instead of end of March, they might be end of April. And I have it drawn to the beginning of May, but I would think, I mean, maybe, who knows, maybe it is in May, but I think that we hit $2 likely in April, but we're well on our way and above $1 by the end of March. I got nothing else to say. Hit the like button, you guys. Subscribe if you want to see more content like this. Thank you all for being here. Bye-bye.